So welcome everyone. This is the QuantUniversity guest lecture series, and I'm pleased to have Jacob Kosoff from Bank of America today for the series of guest lectures we've been having. As many of you have been attending these webinar series over the last year, know that we primarily focus on the intersection of data science, machine learning, and finance. And this year, as you know, generative AI and agentic AI has become extremely popular amongst both professionals and also enthusiasts. And we have been seeing a huge demand in both understanding the capabilities of these technologies, but also I think it's permeating to every aspect. I mean, it usually used to be the data scientists and model risk professionals who typically go and dabble with these technologies, but we're seeing a lot of interest in marketing and in sales and other departments also innovative. I was just mentioning to Jacob, so let me see if I kind of, can share my screen for a second. Thought I had shared my screen. Okay. So this year we had the CFA Boston dinner, wherein the CEO of Bank of America, the CEO of Wellington, and the venture capital company, they all came together, and Katie Couric was the moderator. And I would count, based on my, heuristic, which I just came up for that particular meeting, that 80 to 90% of the discussion was associated with AI.
Wow.
And people, though everybody in the room were CFA charter holders and financial professionals, the interest level in AI, both in terms of use cases, investment opportunities, the growth trajectory, and as you know, with even if you listen to Bloomberg Radio, you just keep hearing about AI. And the challenge which we are dealing in the financial services world is not just using this as a technology, but it permeates every specific aspect of the organization. Also factoring in the different and idiosyncratic risks which we face, but also factoring in the fiduciary responsibilities we have. So it becomes important for us to not only build applications, but we also need to build it responsibly. And in that pursuit, we've been hosting a lot of events over the last few months. So we actually had an agentic AI in finance series of webinars, and we also did a roundtable in Boston in May. And one of the key findings of the particular roundtable, wherein 10 plus model risk management professionals came down, was there was this delta of knowledge, because the first line has a lot of tools and they're enthusiastic and eager to use agentic AI and generative AI in general. But the second line and the third line are having delta of understanding of what all the possibilities, how do we think about validating these models. And in that pursuit, we put together a course. And this course is running through the second cohort at this point. It's called the Generative AI in Finance for Model Risk Professionals. So I'm extremely pleased that the response has been overwhelming. So we had professionals from 10 different organizations who've been participating in this cohort. And it's also very enlightening hearing those discussions on the challenges they face and various use cases they've been having. And what we did was, because of the demand, we are creating an online on-demand version of this program, and it's going to be available from August 12th onwards. I'll provide the link in the chat window, and it'll be available to anybody who within your organization, if you're interested in upskilling yourselves or just understanding the various use cases. So we have 20 plus hours worth of content on starting from the foundations to leveraging agentic AI, testing, evaluation, guardrails, and some of the governance related aspects. And as you know, SR 26.2 doesn't really cover the entire gamut of possibilities of what you can do with generative AI and agentic AI. In fact, it just provides a carve out saying, that's beyond the scope of it. But considering SR 11.7 was the foundation document for most generative AI model and model risk professionals, we were thinking about how can we extend the philosophy and the thinking, but also think about the nuanced nature of the elements of things which we need to understand from generative AI and then bring them into practice. So we've been kind of building out a whole program. having discussions with the industry, and it's going to be available. So I would really, really appreciate if you, have any feedback or any topics under consideration if you would want us to cover. Let us know. And also, these series of guest lectures we've been having, this library is growing. People like Jacob, who's going to speak today, they're spending their precious time to kind of, come down and, share their immense knowledge to the community. And I'm really appreciative of, Jacob coming down and sharing what he's been working on. And he has also presented at the QuantUniversity guest lecture series before. The last time we had a discussion on suspicious activity reports, Jacob. That is actually a case study. I think I showed you something. So we have a case study. We are basically showing how to build a suspicious activity report generator leveraging generative AI and the validation aspects and building out a report and everything. So we have some practical applications, but we also have some other ones with AML and fraud and things like that for illustration of the use cases. And speaking of use cases, I know you have been kind of coming from a model risk perspective, and now you're, moving more closer to the development side of things. And within Bank of America, you've been championing both the, the development aspects, but also bringing in your knowledge about risk and understanding compliance and making sure that people understand how to build these. And you also and you should tell me more, like, what does this Bank of America Global Risk Development Program mean? So, if you can share some aspects about the structuring within, what you've been working on, but also the use cases. You mentioned that, you would be sharing some of your use cases in the context of GenAI, and I would love to kind of, pick up the discussion on that. So this is going to be, less of a presentation and more of an interactive kind of a thing. So people, if you have questions, please, put it in the chat window, and I'll try to bring up as many questions as possible. And also, it's my sneaky way of, kind of chatting with Jacob, because I don't get a chance to talk to him often. So, I kind of, bring it in a public arena and let everybody hear our chats and how we kind of, interact offline kind of a thing. But in all seriousness, Jacob is the managing director at Bank of America, and he leads a team of developers and modelers and works with a lot of, intensive data sets. He serves on the AI Model Development Executive, which is AI MDE for Global Risk Management, Global Technology, Global Operations, and other departments. In his role, Jacob and his teams evaluate risks, ensure compliance with model governance standards, identify opportunities to improve model performance, and assess business value. Additionally, Jacob is the co-executive sponsor of Bank of America's Global Risk Development Program. And he said that he has hired 1,000 people to start working for him, specifically, in New York. So he'll have 1,000 direct reports, and they will each have at least 10 agents each. So he basically is quadruple. I mean, he's gone exponential in terms of capacity. And the only request I'll have for you, Jacob, is, get me a job, and make me one of those 1,000 people, and at least I'll learn from what you've been working on, all the cool things. So welcome again. I'll let you take the stage. Yeah.
Well, first, thank you for having me, sir. I really appreciate it. I enjoy our conversations. And thank you for having me here at QuantUniversity and all the great trainings that you've been putting on and the great forums. I really enjoyed, and you've been having phenomenal speakers, Agus and Rafiq and others. So you've built quite an impressive program. So first, all the comments today are my own personal views and not necessarily those of any bank. And then the examples I give, they're really going to be anonymized in that I'm mixing them together with what's going on at other large financial institutions. So I'm not going to reveal any cases from any specific banks, but it's really a blend. And again, these are my own personal views. So again, I'm Jacob Kosoff. I currently, for the last 4 years, have been at Bank of America. I run a large model development shop, about 100 associates, distributed geographically. We have people in the UK, in India, in the US, in the US, various cities, Charlotte, Atlanta, New York, and so forth. So these 4 years, we've been building models, and I'll talk about models that are being built in the industry. Before that, for 8 years, I was the head of model risk at Regions Bank in Birmingham, Alabama. And before that, I held various model development and model validation roles at other firms at PNC in Pittsburgh, at Freddie Mac, and in consulting. All right, so I want to talk a little bit about the approach I'm seeing in the industry on generative AI, right? And so in most cases, what the rollout has been assistive. The idea is how to assist employees. And if I just kind of run through the largest ones you're seeing that are in production at firms, at large financial institutions. So first are internal chatbots, right? And so when you think about whether you're in the corporate bank and you need to prepare for a meeting with a big client, or you're in global markets and you have questions about strategy, or you're in risk and you have questions about the bank's policies and procedures, or you're in the consumer part of the bank and a customer is calling in and you want to be able to look things up. A format that's evolving at the largest financial institutions are chatbots. Some are broad, but some are tailored towards a chatbot for global payment solutions, a chatbot for retail, a chatbot for commercial bank. And so I'm going to walk through probably about 8 or 9 different categories. But the most dominant category you're seeing that are live in the financial institutions are these ask policy, these ask credit, these ask GPS, these chatbots, which basically go up against your bank's internal knowledge database, right? So it's not as important what's online externally, but rather what's internally, right? What is the bank's policy on this? What is the bank's procedure on this? And then related when you're prepping for meeting with a customer, how this chatbot can go against, again, both external information and internal information to prepare. So that's kind of one of the first things is these kind of conversational agents or conversational kind of chatbots. The second, which is related, which you're seeing in the industry, are which is related, and this is a subset, are like policy procedures and kind of knowledge retrieval. So again, you can have all these things, say it's in risk, and you have the policies and procedures. In global markets, you have all this data related to deals. Again, these are tools that sit on that help you summarize, help you identify, to help you prepare ultimately for your meetings with clients or to look things up. So if you think historically, years ago, you had a 100-page policy and you had another 100-page procedure, and you wanted to compare if the procedure aligned with the policy, right? So now, using these tools, you're able to kind of query. Well, you don't have to put them in there, right? They've already been added into into the tool. You can ask questions and saying, what does the policy say? What does the procedure say? How are they different? And maybe your firm has 100 policies that could be relevant. It's able to be more advanced in a control find. It's really extracting that meaning. So when you think about that subset of chatbots, one where it's really a knowledge retrieval, whether you're again global payments or you're in risk, whatever it might be, or an audit, it's a going against this knowledge database. Right, so that's one category. The other category is drafting, is writing, right? So I talked a little bit about summarization and a little bit about identification. The other is drafting. And so what you're seeing at the large financial institutions are tools not to write the final product, but to write first drafts of a pitch book, going against internal data and external data within your system, writing first drafts of suspicious activity reports in your financial crimes team, writing first drafts of credit approval memos, right? And so these are tools that are taking a lot of complex inputs, right? Conversations that have been digitized, documents that have been digitized, data, external Bloomberg feeds or Thomson Reuters feeds or S&P feeds, plus internal data to help you write a first draft of something. Ultimately, these first drafts, whether it's a suspicious activity report or an internal memo or a pitch book or marketing material or a credit memo, whatever it might be, the output is just designed to be an input into an employee's decision. It's not replacing an employee. It's helping the employee be more effective and also hopefully be a little bit more efficient as well. So that's the kind of next category of this content-aware drafting. And the most important part is that it's going up against the information you want it to go up against. The other aspect is that not just human in the loop, but if the model's wrong, that's your fault, right? And most firms, you hear it on CNBC or Bloomberg where their CEOs are talking, or in internal forums where they're saying, you are using this just as a tool. It's like if Google Maps said turn right and you drove into a lake, that's your fault. You can't sue Google. So same thing here, is that these are just tools for the employees to write their first draft, and they're ultimately responsible for that. All right, so that's that next category. So what are we seeing so far? We've talked about, we have these chatbots, and that go up against your knowledge database. You have first doc writing, right? First drafts. that still go through the normal QA, QC process you would do it if it was human drafted. So, in the next category, you're seeing more and more firms use are what you call document parsing, right? Items that retrieve or documents, extract key fields, checks for completeness and so forth. And so these are basically, I guess one way you could think of it as kind of PDF inputs. So your firm's using a lot of PDFs. People have marriage documents, people have deeds, people have 1099s, people have things from insurance companies, people have a variety of documents that they need because they're applying for a mortgage, or they're adjudicating a will or a trust, or they're applying for a credit card, or they're applying for a business loan, or they're having a transfer of ownership, whatever it is. Your firm's often dealing with a lot of PDFs. And so a common way that you're seeing within this space is this extraction of information from PDFs, right? And mapping it again, whether it's for home equity or whatever you're using it for. And so that's the other one, is this digitization that's becoming quite popular and being broad. And this is where I would say a call to action is being mindful of duplication, because it's very easy for a firm to not know what other parts of the firm are doing and say, oh, I need that. I'm going to build my own optical character recognition tool. Oh, I need something that absorbs and PDFs and extracts information. Oh, I want something like that. And if you don't coordinate, you could end up with 10 of these at the bank. You could end up with too many tools that do the same thing, tools that basically take PDFs and extract information, right? And then you're saving them in wildly different places and being duplicative. So you really want to make sure, I guess with all these, but in particular on the document extraction, is that you're very mindful of what already exists at the bank. You're mindful of where you're saving it, so you're not extracting information from the same PDF over and over and saving it in different places. And you're just mindful of kind of an enterprise-wide approach to this. So that's, I think, really important to think through in that category, which is on the documents. Another category I would say, and these are starting to become related, is how would I word it? Like client recommendations. So, you have all this information about your client. How can you're using these tools to help come up with kind of next best actions? And so you're seeing these more for, frontline associates of these kind of AI powered insights, which again, the format, the interface could be a chatbot, but ultimately it's designed to come up with recommendations. So that's a category that's becoming quite popular across the largest banks. And I think with this, one thing to note is that firms are really trying not to just throw AI on top of things. And so what you're seeing is that in a lot of firms, first you map out your current process, right? I collect data, I do this, I write a document, it goes here, here. You map out your process, right? You have this kind of process inventory, and within each inventory, you describe your process. Then you walk through so I'm kind of walking through, backing up before you even use these tools. And I'll talk through some more kind of use cases in a minute, but how are most firms approaching this just overall? They're saying, let's map out your current process. What do you do? Whether you're in credit or financial crime or any part of the bank or financial service institution, what is your current process? All right, I do A, I do B, I do C, I do D, I do E and F. This is my flow. All right, where are your pain points? All right, my pain points are part A and D. What are those pains? Oh, it takes too long, or it's inaccurate, or there's too many handoffs. Okay, what do you want to do? I wish I had a tool that could summarize this or write this for me or identify this or compare. And the idea is not to throw AI on top of a whole process, but one, how can you forget AI for a second? How can you simplify your process? So my call to action to everyone on the call is that before you say, oh, I want to use AI, really think, understand, do I have a mapping, a flow of my whole process? Where does it start? Where does it end? And some of that's not in your control, right? It gets handed off to other people. Where are my pain points? Let me listen to those associates. So if it's related to AML, don't just start building something until you interview dozens of AML investigators, right? If it's related to fraud, don't start building until you interview dozens of fraud investigators. If it's related to credit, don't start building something unless you actually interact and interview the underwriters and the people writing and approving credit approval memos, right? Really understand the process. So that's my first, especially if you're a model developer, you're a quant on the call, a data scientist, do not start building anything until you've spent time with the front line, until you've spent time with the people that you're trying to build something for. Because too many times you hear in the industry, you build something and it was not built to the needs of the person actually using it. So that's really important. Okay. So now once you've understand the real pain points, then you're not guessing. You've actually interviewed people, you've actually looked at time studies, you've actually looked at your cost of activity data, and you've collected all this. Then you think, okay, where can AI work? Where can it not? What do I need? I need document extraction, or information extraction from documents. I need summarization, whatever you might need. Then you say, okay, I want to apply AI to this part of the process to write a first draft of a memo, let's say. Then you want to roll it out, not to all 1,000 people that might do this at the firm or 500. Let me roll out to 10 people, see how the feedback is. Let me roll out to 20. Let me see where it works. Okay, it doesn't work well with cash structuring, but it works well here. Or it doesn't work well with international, or it works here. Or it doesn't work well with trade surveillance, but it works here. Really trying to figure out where it works and where it doesn't. And I think this is really the part of what I'd call end-to-end business process, improvement, or even in some cases automation. Really trying to understand like the multi-step process and where it flows, where you're building in guardrails, using AI not for just saying, oh, I want to use it, but where is your flow? Where is your process? And this is what I want to do it. And for those that might be presenting some ideas to your leadership, I think one thing, kind of a 2-slide approach, is make a slide of what your current process is. Step A, step B, step C, step D, how long it takes, 20 minutes here, 10 people, or 10 minutes, 50 minutes, how many people do it, 5 people, 10 people, 100 people, whatever. And then where AI will step in, where it will improve on the quality, and where you expect on the time saving. So I think I just really want to call that out on the end-to-end process automation. And there's other examples of where they're being used at the firm. There's ones related to laws, rules, and regs. We have a chatbot that goes up against, a live database of laws, rules, and regs that have changing. You're seeing it with productivity, like more and more firms have rolled out tools to help you write code, GitHub Copilot, and similar solutions that are helping you write code. And so I think that's where you're seeing these use cases. You're seeing these use cases in summarization. You're seeing these use cases in generation, writing first drafts. You're seeing these use cases in client kind of meeting preparation for client meeting prep. You're seeing these use cases, like I mentioned, which are, how would I say it? These chatbot that go against your policies and procedures, your standards, your templates, in whatever part of the bank you're in. And you're ultimately seeing most of them that are live today designed to assist the employee. Very few that are live, that are generative, are really customer facing yet. Some are non-generative AI that are customer facing, but most are employee facing at the large financial institutions. And now I'm going to talk definitely a lot of time for questions, but now I'm going to talk a little bit about governance. What you're seeing at most firms the last few months is the compliance and operational risk teams playing a larger role, right? So how is July 2026 different than maybe January 2026? Is your operational risk, your compliance risk is playing a larger role, right? They're getting more involved on testing for privacy. They're getting more involved on testing for technology risks, right? Testing for access to the tool, testing for information security. You're seeing the legal team or the team within risk that tests legal aspects getting more involved with fair lending, more involved with privacy, more involved, as I mentioned, with identity management. And so that's one thing. If you think about how AI was managed and challenged in January of 2026, a lot of firms, first now, you're seeing the non-model risk teams, right? You're seeing the compliance risk teams and the operational risk teams doing more testing, coming up with more control metrics, more controls, more performance metrics, testing for control effectiveness, doing ongoing monitoring, a lot more of the compliance operational risk teams playing a larger role. The second thing you're seeing now versus 6 months ago is a larger role by your HR teams, right? Really getting involved in these approvals. What is the employee impact? Do we have to retrain employees? Where does that involve? How can we make sure this helps associates and this is beneficial for them? And really driving to making sure you're having effective listening sessions, right? That AI is not happening to associates, but the associates are bringing up ideas of where they want to use AI, where it can help them, where it can help them be more effective. And so you're seeing, some of the evolution of where the conversations were 6 months ago of, we as the quants or we as data scientists are going to build AI and push it on these teams. And now you're really seeing an evolution in most of the large banks where it's the other way around. We're saying, no. We're not just building something. We're going to talk with the frontline associates. Where are your pain points? Where in your process is it difficult? Where are you having concerns? And how can we build this to help you meet your needs? What are your business requirements? And so you're seeing less, hey, I built this, now shopping it around, which was very common 6 months ago at a lot of firms, to interviewing the lines of business, interviewing the associates, the day-to-day associates that are in these processes and asking them for their feedback, and then building to their specifications. Of course, not building your own, large language, usually utilizing frontier models built by others, but ultimately applying it for a genuine benefit. So that's one aspect you're seeing within governance. And I think this obviously has to work closely with your model risk teams, because if model risk was testing this and compliance is testing that, and there's an overlap, really working through those swim lanes. And the other aspect you're seeing a lot of firms is rigorous project selection discipline, right? Every dollar at a firm has an opportunity cost. If you fund project X, then does that mean you're not funding project Y? And so there's a lot more, I shouldn't say more, but there is a lot of rigor on, you're seeing at firms, of rank ordering projects, of saying, okay, which is more important? Is, first drafts of issue drafting, is that more important than issue summary? Or which is more important within financial crime, right? Project A or Project B? And so what you're really seeing, again, is a lot of dialogue on, well, if we're going to spend millions of dollars or deploy lots of people on this project, is it really worth it, right? What is the benefit? What is the genuine benefit? Is it making us more effective, make us more efficient? Does it bring more revenue? And so you're seeing a more rigorous kind of project selection, and then continuous kind of project management, but from are we getting the benefits you said you would? You said when you pitched this idea a year ago, this would take process X from 5 days to 3 days. All right, it's a year later, you've built it. Is the process 5 days still, or did it come true? You said 3 days. Or you said when you do this process, instead of needing 100 people, you would only need 95 people, and you would redeploy those 5 people to Department X. All right, is that true? Did you redeploy those 5 people to the area that they wanted to go to, that's more exciting, that a higher and better use of their talent, it's fun for them, they add more value, and you're living with 95 and doing great with 95 because of your solution? Are you still at 100, right? You said you're going to generate more revenue because it would help you prepare for client meetings or identify client needs better. Did that come true? So I think that's the other aspect you're seeing. Isn't just, all right, let's go live with this project and close your eyes, but you're really saying, okay, report back. It's 6 months in, it's 12 months in. Where are you? Hey, we approved this tool to write a first draft, or we approved this tool to compare these documents, or we approved this tool related to fraud. Did it come true? Did these things come true? And the other thing I think you're seeing more is a more democratization of your inventory, right? Well, before it might have been pretty hard. Like, I don't know if there's another optical character recognition model at the bank. How would I know? I'll just build my own or buy my own. Now you're seeing more firms making their model inventories and AI inventories a little more transparent. So it's easier to see what already exists, not for every single associate, but those that are involved, easier to see what already exists, so you're not being duplicative. So I think those are some of the trends we've seen over the last 6 months. More use cases, a focus on what is your actual return, a not saying yes to everything, a disciplined project selection, a growth of compliance and operational risk having a larger role, model risk having the same or slightly less role if compliance has taken over things, still a rigorous intake or toll gate process, but asking really the hard questions on the benefits. You're seeing legal, of course, playing a large role related to copyright infringement and information security. Your tech risk teams playing a large role on information security and identity management and access are playing large roles. So I think those are some of the evolutions. With that, I can pause and take some questions, Sri.
Awesome. Thank you so much, Jacob. This
Yeah,
was fascinating. Um, this I was kind of making some notes on as you were kind of speaking. So let me maybe start out with a few questions on
yeah,
my own and just kind of connecting the dots with the things we've been discussing in the course and also some
yeah.
of my discussions with the companies. Now you came from regions and now
Right,
you
right,
are at Bank of America.
right.
Now the kinds of lessons learned at Bank of America, considering that you have just onboarded 1,000 people,
Yeah,
probably regions won't have a similar bandwidth, or
right,
smaller
right.
firms won't have similar bandwidth. So how do you foresee organizations kind of think about the challenges with adopting generative AI problems and projects
Yeah,
in a systematic way? Because all financial institutions will require some amount of rigor, but
that's
they may
right.
not have the same bandwidth as Bank of America.
Yeah, no, great questions. And I think the largest banks are really at a good advantage. And so Sri was referencing, and you can find it on CNBC or Bloomberg, that each year the bank hires a lot of individuals coming out of campus and also military hires. And so we have these campus hires, right? And, here in New York, there's over 1,000 individuals that have joined either through military hire or campus hire that join in the summer. And, 100 go to finance and 50 go to risk and so on and so forth. And you can hear our leadership talk about this on various CNBC and Bloomberg, that we are committed to hiring. We hire from community colleges, and we're hiring, and which is phenomenal, especially a lot of hiring from military, from community colleges, and from campus hiring. And what's so exciting about this talent that comes in, they bring in fresh ideas, but a lot of them come in, have already been using generative AI at home, right, on projects that they have, and bring like this fresh set of eyes.
Mm,
And what's so good is that as large firms often take an operational excellence approach, saying we have a current process, let's not assume it's perfect. We really want to challenge it. We don't want to just throw AI on top of it. We really want to challenge it. How can we make it better? How can we simplify it? How can we make it more effective? The new talent, the young talent that's coming in, or not young, the new talent that's coming in are often bringing that fresh set of eyes. The other one is really trying to make that balance of, we want them to know the process well enough so when AI is wrong, they can challenge it. And that's a huge theme of this week, which is that, all right, say we have a, if historically, say in the credit space, you would spend a lot of time in your first few years in the industry writing credit approval memos, and it took you a week. Or you spent a lot of time writing pitch books, or you spent a lot of time producing different materials related to the credit worthiness of a client. And that's now you started at the bank 20 years ago or 10 years ago, and you really learned so much in those early years writing these solutions or writing these documents, you just learned a lot. Now, if you roll out something and you're listening on the phone and you're saying, "Oh, we're rolling out something this September that's going to write a first draft of a credit approval memo," right? But it could be wrong. Well, as you think through, how can the associate challenge it if they've never written one themselves? If they don't
mm,
know what good looks like, if they didn't spend those years. And so that's really a hot topic on, as we bring in talent,
mm,
to make sure that maybe we actually don't give the tool to the talent on day one. Maybe you actually want them to have to write a credit approval memo or another document or a pitch book themselves initially. Maybe you give to them, maybe you don't, but it's a good, healthy debate on what skills we want the associate to develop. And I'm
mm,
not saying there's a right or wrong answer on this, but there's a healthy debate of, I need them to know this and they want to know this, so they can challenge it later. So if the output of a generative AI solution is wrong, they have enough expertise to challenge it. I'll give you an example. So my daughter is 16 and she's learning to drive, and we're not using Google Maps. She has no maps, right? Because I want her to learn the neighborhood. At home, we actually have printed out maps of the neighborhood. I want her to learn her route to school. I want her to know the route to the supermarket, her route to her friend's house. So she learns it and
mm,
isn't reliant on it. So we've built that in because we want her then, when Google Maps is wrong, she's saying, "Oh, I know that my friend lives over there. I've been there before. I know the map. She can challenge it." And just also with her, we currently don't allow her to make left-hand turns because that's not her strength and it's a little risky. So we go the long way and we just make a lot of rights because just we're putting guardrails on some known weaknesses and limitations of her driving abilities. At 16, I think when she gets 16 and a half, fine, we can let her drive, make left-hand turns. And so I think it's the same thing again with AI is that on the first point, you don't want to give it to somebody who's going to over-rely and not know when it's wrong. So same whether it's on the credit side or it's on the driving side. And also knowing where the risks are. With her driving, her risks are left-hand turns. So we put a control in that doesn't allow her to make left-hand turns unless there's like an emergency or no other option. And so I think as we bring in new talent, we have to think from a training point of view, how much an associate's learned by hands-on keys doing, by sitting at the desk doing, and what trade-offs are we making, if any, if we use AI and they might not develop that skill. So that's one. Second is where should we turn AI off and saying this is not useful? I was talking with a friend from a different bank over the weekend, 2 weekends ago, and he was talking about that at their firm, they have a meeting summarizer available. And he said the meetings are in whatever this type of department at Bank X, the meetings are recorded. I said, oh, that must be great. I don't have to take notes. He said, it's horrible. I was like, what do you mean it's horrible? He says, we used to have honest conversations, hard conversations, but now everyone's freaked out that they're recorded and it's going to be summarized. They're not having the honest conversation. So what happens is you have the official meeting, and afterward they call you on your cell phone and saying, hey, I didn't want to bring it up in the meeting, especially because it's recorded, but we need to make decision X or Y. And so that's one of the I hadn't thought of before, but at firm X, that it not here at a different firm, at least according to one person's opinion, it is discouraging honest and frank conversations, and it's leading to parallel phone calls afterwards. So I think that's the other thing to think through is what are the knock-on effects if you deploy something. The person doesn't have the skills, or you can't challenge it because you don't know it well enough, or you're pushing people offline saying, I don't want that digitized. I'm going to pick up the phone and call you. So those are things to be mindful of.
Yeah, absolutely. I mean, this is the fantastic examples. I love your daughter's example. I was also taking notes because my daughter is 14, and she'll need those lessons. So I hadn't thought about like the right turn only strategy. It's a good guardrail, if you will. So a couple more questions. I think Wayne has a question. Do you think that a lot of the current evolution will back off after ROI and some recognition that a simpler process will simply replace with a more complex surrogate? And another question is, are the larger banks bridging the 26-2 carve out, which is there for GenAI and agentic AI, with governance consistent with other traditional models?
Yeah, so on the first question, I think firms are really focusing on ROI, whether it means better risk management or it means cost ROI or it means more revenue, and really challenging and saying, hey, you brought this idea a year ago and you said you're going to have these benefits. It's a year later, it didn't come true. Now you're coming with a second idea. Sorry, man, you've lost your.
Oh, did we lose Jacob? We'll give it a minute. I think we just lost him.
Oh, can you see me now?
Yeah. So now you're back. Yeah. We lost you for a second. Yeah.
All right, I'm back. So I was talking about the ROI based on Wayne's question. And so I think firms really are pushing back that if you come with an idea and you got approval and you built something and you said you're going to have this benefit or that benefit, it's a year later and you never had that benefit. Now you're coming a second time with a new idea. Leadership's going to say, buddy, you didn't bring the ROI you said. You said you're going to make this process faster. You said this will take you from 5 days to 3 days. It's still taking 5 days. Or you said you don't need 3 people anymore on this. You only need 2. You're still using 3. Or you said it was going to have us, win market share. We didn't win market share. Or you said it would help us have, would it be more accurate on this? From your QC process, it doesn't look like it's more accurate. Or you said it would make employees more engaged. From our survey, it looks like they're less engaged now. Like you set metrics and we agreed to it and you haven't even hit those metrics. So now you want to bring a second idea? I'm sorry, buddy. So I think from the ROI side, it's really important to be mindful of, unless maybe you're retiring in 6 months, then who cares? Maybe, but assuming you're going to be long-term at the firm, really think through your reputation and your reputation risk and the credibility. That if you push through some project and you kind of convince everyone there'll be this ROI and the ROI doesn't come true because of your own fault, right? You exaggerated. are you really going to be trusted when you have another Gen AI idea that you're sponsoring? So I would be really mindful of that. And I think the other point is on the ROI, really just don't exaggerate. That's my
Mm.
advice to everybody. Only put in things that you can commit to, your leadership commits to, right? Don't say, oh, we have 10 people doing this. After we have this, we'll have 2 people doing it. Yes, your boss is like, no, what the hell are you talking about? No, we'll still have 10 people. Don't say we're going to have 2. There's no way we're going to have 2. You're wildly off. Maybe we'll have 9, but we're not going to drop down to 2. So really make sure your leadership is on board with whatever you're presenting and work through it. And yeah, just don't be very mindful from the ROI that you're not exaggerating, and you prove your competence. So if there's 2 different teams, Team A and Team B, and they put in an idea and they commit to an ROI and it comes true, and Team B commits to an ROI and it doesn't come true, many firms are likely going to invest more in the one where the ROI came true.
Yeah.
The other one on risk management, I think, and I had a phone call this morning and I was walking over from the other location, and the conversation was, how do I word it? If model risk say your standard, let's use driving, right? Say you don't feel comfortable driving over 80 on the highway, right? And you say it's fine, the speed limit's 75, so it's fine, I drive under 75. Then let's say the speed limit becomes 100. You could say, well, actually, even though the speed limit's 100, I'm allowed to drive 100. I don't want to drive 100 because I don't want to crash and die, or I don't want to crash and injure myself or hurt my car, hurt somebody else. Like, I don't want to do that. And so I think the same thing when you think about maybe some regulatory expectations might go down. You could say, well, even though that goes down, I don't want to take that risk. Even if the speed limit on the highway goes from 75 to 100, I don't want to drive 100, even though I won't get a ticket. Honestly, a ticket's not what I'm concerned about. Dying is what I'm concerned about, or breaking my arm or leg or whatever it is. And so I think the same evaluation I've seen in some conversations at large banks is saying, even if you're allowed to do something, doesn't mean you should do that. And so, you can say, oh, well, now I don't have to do ongoing monitoring for my model. Well, don't you want to do ongoing monitoring? Well, first of all, maybe you still have to, and you're misreading something. But assuming you're true that you don't have to, don't you want to know if it's working? Because maybe if it's not working, you should turn it off and buy a better model or build a better model or use it only in those cases where it works well. Like, don't you want to know what's working or not? So that's one. I think where you're seeing with SR 26.2 is an opportunity for non-model risk, and, information security risk, identity risk, access risk, privacy risk, intellectual property risk, operational risk, complacency risk. These other risks have an opportunity to kind of step up more and say, you know what, there's a lot of risk with these things, and most of it's not model risk, right? It's people risk, it's operational risk, it's reputational risk, it's legal risk, like it's strategic risk. And so I've really seen a blossoming over the last few months at large firms of the ops risk teams, the compliance risk team, really showing up, being more present in the meetings, asking the hard questions, getting themselves more involved in the risk assessments and the readiness assessments. So I think even though 26.2 might pull back on some things, you're really seeing compliance operational risk playing a larger role in these spaces recently, especially in like access and information security and identity. Yeah.
Nice. I mean, like this is kind of the similar discussions we've been having in the class, because just because there's a carve out doesn't mean that out of mind kind of a thing.
Right.
It's definitely on the top of everybody's list, because novel risks, there is also the wrapper risk, wherein you wrap a traditional model with an agentic AI wrapper and then call it like, oh, it's no longer in scope.
That's right.
So
Yeah.
there are all these, like, and I'm also glad that you brought up this cross-pollination of, risk discussions, if you will.
Right,
It's not just
right.
model risk driving the discussion. So you have cyber risk and operational risk and reputational
Right.
risk and all these other risks which are, becoming a part of the discussion. So another question, and we were talking about tiering, and we had a lot of discussions the last few
Yeah.
weeks on risk tiering. Now, similar to you kind of, mentioning that you hire a large number of people and
Right.
bring them into the organization, companies are bringing a large number of agents into the organization
Right.
too.
Right.
So how do you kind of, the model inventory used to be static and
Right.
it used to be tractable just the last few years ago, and now you have so many different wrappers and so many different tools,
Right.
so many agents kind of come into the picture. So, how are you addressing this notion of, first of all, what is a part of your inventory?
Right.
Secondly, how do you tier them? And how do you even prioritize the AI use cases?
Right.
Because
Right.
all of them will not get the same amount of budgets to put in all the bells and whistles to
Right.
manage the entire process.
Right.
So, how are you operationally handling all these challenges?
Right. No, phenomenal question. I'll tell a story from 12 years ago, not even AI, but this I think helps illustrate it. So I was at Regions Bank. I was the head of model risk. It was, I think, June or July of 2020, or sorry, 2014. And our inventory did, so I got a phone call, and the topic was about trees. I was like,
Hmm.
trees, what? And they said, okay, well, if someone owns a forest or it's a timber company and they're applying for a loan, the bank will use some of the collateral on the value of the timber, right? And so we send out these environmental engineers, not me, I mean other parts of the bank send the environmental engineers, they chop down one tree and they assign a value using a model on how much the trees are worth based on the health and the years and the type of wood. And they have a model. They have a model that produces a collateral evaluation model for trees. The
Mm-hmm.
bank also has the same thing for natural gas and for oil and so forth. And so these are basically collateral models and then related kind of loss given default models on reselling
Mm-hmm.
if the firm goes under, how much you could resell, the forest for. Um, and the question is, should we validate it? And I remember spending a lot of time in these conversations saying, no one on my team knows how to do this.
Mm-hmm.
These guys are really good at doing it, from my understanding. But we don't I don't think our validation would add any value. So we added it to the inventory and saying this is a model, right? These are natural resource collateral evaluation models, and we are not going to validate them. We have them in our inventory, but we're
Mm-hmm.
not doing any testing on them.
Mm-hmm.
We did testing on when it was a house, right? For the valuation models for homes, right? For home equity, these AVM models, we validated them. And we validated the automobile ones, right? And the manufactured housing and the RVs, but we didn't validate those that were related to natural resource. We didn't think we added any value. And if the regulator has a question or an auditor has a question or another party has a question, we can explain comfortably we made a thoughtful decision that we are going to have them in our inventory and not validate them. I know in some firms there's a bit of a split on insurance models and actuarial
Mm-hmm.
models. Some regional banks, some are 100 billion, 150, 200, 250, and you'll see a split. If you were to interview today banks between 100 billion in assets and 250 billion in assets, from my understanding, half validate their insurance models if they're part of an insurance company, and the other half no, saying no, we don't validate
Mm-hmm.
MRM. That's somebody else, right? There's a split, right? And that at least from my understanding, that regional banks are validating insurance models. But some that don't validate them still keep them in their inventory. So one is that you can inventory things for
Mm-hmm.
other benefits than just validating. It's use it so to prevent duplication. People can say, oh, I'm going to use that tool or that tool. So I think having that inventory is good. The second other point of inventorying, and to the core of the question, the AI agents, is by having that inventory is one, on duplication. Two, even if model risk doesn't validate them, maybe other parties,
Mm-hmm.
technology risk, or the privacy team, or the access management team, or your other parts of your information security team want to know about that, want a one place spot they can go
Mm-hmm.
and categorize those. And then you have a debate about aggregation. Do all these count together? Do they not? I remember back again when I was at Regions in 2015, I think 2015, we had all these like automated valuation models for homes. Do we count as 20 models, 10 models, 5 models,
Right, right.
or the debate 10 years ago with CCAR and saying,
Mm-hmm.
well, do I call it a mortgage loss forecasting model, or do I call it mortgage PD? Do I call it mortgage loss given default LGD? Or do I
Yeah,
call it,
GD.
is that 3 models versus 1 model? So these debates are quite old, but I think I recommend inventorying them, even if you're not going to use them, for all the other benefits, and then having a good conversation of what is effective risk management, not because the regulator said so or audit said so or whatnot, but then where are the actual risks,
Mm-hmm.
and we should test those and then figure out who should test them, ops risk or compliance risk or model risk. So I definitely recommend inventorying them. Yeah.
Okay, cool. Awesome. I know we have a lot more questions. I know, but we're also getting close to the 2 o'clock hour.
Right.
So I'm going to try and ask one or two more questions and
Okay,
we'll
great.
wrap it up. But when you were mentioning trees, and I was thinking random forests and trees. I was like, oh yeah, you're kind of using trees. But then when you started talking about cutting trees, and I'm like, well, the technical term, Jacob, is pruning, not cutting. But then I got like, oh no, no, you're talking about real trees. You're
Real trees,
chopping
yeah.
trees.
Yeah, exactly.
So that's a
Timber,
different
yeah.
area altogether.
Lumber.
So yeah, but the other aspects, I know there has been a lot of discussion. I'm getting a lot of questions, and I know guys, people who are asking these questions, these are amazing questions. I wish we had more time, but also some of these questions are addressed in the course we are teaching. So you
Oh,
should
good.
definitely, some of the questions like, what are some ways of validating and testing models?
Right.
Nick is asking. So I think it's a very, I mean, you should spend 20 hours discussing the different things. And also there was the question about industry metrics for assessing reliability. So I think we have a whole eval section. So I would kind of defer those questions to the course material, because I want to kind of ask some fun questions to Jacob. So Jacob, I think we should kind of end up in like two things. So let's say one of your 1,000 folks who came down to your training session comes down, and you say, okay, you are going to go and work in the second line. And he'll say, no, 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 please put me on the first line, please, please, please. I don't want to be in the second line. Budget issues and fighting all the time, and risks are so high, and I'm always to blame. And also, like, my job is kind of, I don't know if I will have my own job in the second line because everybody else is talking about risk. So, how would you advise someone who is entering the second line
Yeah.
to think about, kind of building a career trajectory
Yeah.
in terms of, as you were mentioning, I think I was kind of seeing that at another place too. You want to leave your place better than how you found it, right?
Right.
So many of the things we are doing in the MRM profession, we're setting up the platform, we're setting
Right.
up the guidelines so that the applications don't just become, expensive experiments. And we are setting up those guardrails, and now we are evolving those guardrails to ensure that as the technology and other facets evolve, we are also evolving. So, how do you kind of have a conversation with someone who is motivated but
Yeah.
also concerned about entering the second line?
Right. So great questions. So one is when I think about the role models I have in banking, many of them have worked across different lines of defense. They've been in first line, they've gone second, they've gone third, some have been regulators, some have gone back to first line. So when you think about, often your first assignment isn't where you're going to be 20 years later.
Mm-hmm.
So that's one thing, is that you're not committing to being risk for 20 years. And maybe you will and you'll love it, but maybe, you work in enterprise credit risk and then you move over to credit underwriting. And then when you're a relationship manager, you're one of the best relationship managers there are, because you know the credit process of the bank, right? So
Mm-hmm.
I think there's a lot of value in having experiences across different lines of defense. So that's one. That it's not forever. Second, I think the value of being in risk, you can get quite a wide view. You can,
Mm-hmm.
especially a great place to start the bank, as opposed to jumping into a very narrow spot in a line of business, which has a lot of advantages. But one of the advantages of risk is you can kind of step back and see the bigger process, the bigger flow, how it connects, and you're really being paid for thinking, of
Mm-hmm.
challenging, of saying, whoa, this, let me think through how this could go wrong. Maybe not the probability it goes wrong, but what are all the ways things can go wrong? And at the heart of a lot of risk management teams is really the question, let me imagine what could go wrong. Let me think what can go wrong, and let's test that. And so I think in that way, it's quite a fun job, whether you stay in it for 2 years or 20 years, or forever. It's quite fun that you get to challenge a process.
Mm-hmm.
And then I think set yourself up that you do so well that the first line wants to hire you and said, my goodness, you did such a great job validating my models. Why don't you come over and be one of the builders? Or you did such a great job challenging this process. You actually recommended ways I can make my process way better. Why don't you come over? And so one idea is to think through, your experience is an opportunity to prove your competency,
Mm-hmm.
to deliver on what you committed. Hey, I'm going to get you this report. My model validation report is going to be useful to you. It'll be practical. It's not going to be about documentation, and I'll get to you in 3 months. And you deliver on timeliness, you deliver on practicality, you deliver on being a good listener to them. You're being good at not giving them surprises. And they could say, that's amazing. And then you do well, and they tell your boss you do well, and you get promoted and you grow. Or they say, you did amazing, I'm going to hire you. And you could think through that option. So I really think there's opportunities to develop skills, to learn, get a good horizontal view, to really think and challenge, to reimagine processes, um, to especially the reimagine processes, and improve your competence and also build relationships, right?
Mm,
What's nice about a lot of risk areas, you get to work across different parts of the bank. You interact with audit, you interact with technology, you interact with other parts of risk, you interact with some compliance parts of risk. You have an opportunity to really build a healthy network. I think
mm.
there's a lot of advantages of it. And if you like it, wonderful. And if you don't, you have an opportunity to put yourself to be very marketable after a few years in risk.
Absolutely, yeah. And maybe I'll give you 30 seconds
Yeah.
to kind of take the other side of the picture. What if one of your peers, people who have spent 15, 20 years in
Mm.
this profession, now they're being challenged with like all these new technologies, and they're thinking like, what is my career trajectory going to look
Yeah.
like with all the AI agents, and in some
Yeah.
ways, will I be replaced with a validator agent
Yeah.
or some kind of documentation writing agent?
Yes. I
Because I
think there.
used to do all
Yeah.
these SaaS things or tasks manually, but I have a lot of domain experience. I have a lot of domain
Yeah.
expertise. So how do I upskill myself,
Yeah.
to be kind of the orchestrator,
Yeah.
manager, kind of, for both humans and agents,
Yeah.
rather than thinking of my career as, something, had its heyday back in the past kind of thing.
Yeah, no, that's a very valid point, and that's a genuine concern people have. I think one opportunity is to really step back and saying, how can I apply my skills and my network and my work ethic to a new set of work, right? So
Hmm.
one is I've done this on traditional models. Can I do this on AI? So that's one. The other one is being adaptable and saying, "Hey, manager, if we're going to have AI agents that do validation, where do you think there's another need for me? Actually, we have this whole new thing. We need to put you on cryptocurrency, or we need to put you on blockchain this, and we have to put you on quantum computing, or I need to put you on a research team, or I want to put you on, AI deployments, or I want to put you on this engineering, or actually we need 20 more people in information security." So the
Mm.
other point is showing you're adaptable and that you're willing to learn new things. So if a call comes in and saying, actually, we need 10 more people to build fraud models. Great, put me in. I've been validating fraud models for a decade. I'm happy to do it. We need 5 more people to build anti-money laundering models. Great, count me in. We need someone to help we need 3 more people to stand up a new AI risk management team. Great, put me in. So I think the other aspect is to continue to demonstrate that you are adaptable, you are flexible, you're a continuous learner, that you embrace change and don't fight it. And then the final answer is be part of the solution. Raise your hand first and saying, you know what I think we need at the bank? We need to develop an AI area of coverage. And I think we need to have more people focused on international laws. The bank does operations in countries A, B, and C. We should invest more. And I'd be happy to do it if you're interested. If not, somebody else. But I think there's this need. So part of it is to be proactive and saying there is a gap. We need more people evaluating compliance with the EU-AI Act, or we need more people evaluating the impact on are we complying with the American Disabilities Act with these new rules? Or I need more people that are more quantitative sitting in legal, or
Mm.
whatever you think is a problem. Come up with imagine some ways, talk with people in those areas that you might want to go into legal or into technology or into others. And you can go to your manager and say, hey, manager, I see we probably need a few less people. And to be honest, I can
Mhm.
automate my job away in 2 years.
Yeah.
If I do that, don't fire me, don't let me off. But if I automate my job away, can you help me find a new role and have that partnership and use your leadership as a partner in the journey? Yeah.
Yeah, thank you, Jacob. And I think
Yeah.
your enthusiasm comes through very well. And I think those thousands of people you are mentoring or speaking to, they are blessed to have you.
Oh, too
And also,
kind.
Bank of America is lucky to have you.
Oh, thank you.
We've known each other for many, many years.
Yeah.
You always bring in the best insights, both
Oh, thank you.
motivational, but also kind of, bringing the reality picture. But in the spirit of continuous learning, right? I think that's where we have been focused on too. And I
Yeah.
think I share your concerns and also the motivations you were kind of talking about. And learning through these kinds of opportunities, peer interactions, and peer learning, and also some of the formal learning we are proposing through some of the courses we are doing. I think those are channels through which you can upskill and cross-skill yourselves. That
Correct.
way you can also acknowledge that there is a delta of understanding. Many a times, people don't acknowledge, and they think that there is a one-to-one transformation for what, translation to what you've already been doing to apply to the new thing. But many times, like as you were mentioning, cryptos have a different, trajectory, and
Right.
quantum has a different trajectory. So the motivation to learn and the only constant in this world of change is change,
Correct.
right? So you got to be the spirit of learning and continue the learning. So with
Yeah.
that, I think we should wrap up today's session. Thank you again for this amazing
Yeah.
discussion. Looking forward to connecting with you again and
Yeah.
continuing the discussion. And also people who have been joining us online, we're going to have Rafiq speak next week on the 30th, and he's going to be presenting some of his views at the Fifth Third Bank. So I will be sending out the invites, and I would hope to see you all in the next week's session. And we will keep this conversation going online. And if there's anything we can help you with at QuantUniversity, please contact us, and we'll be happy to get back to you. Thanks again, and enjoy the warm summer evening.